In this video, I'm going to discuss about responsibility accounting. Before we discuss about responsibility accounting, let's get to know about these terms. Delegating, budget center, budget holder, controllable costs and uncontrollable costs. What is delegating? Delegating is the process of assigning responsibility for creating and managing certain aspects of the budget to specific individuals or departments within an organization. This specific term is really important when it comes to delegating. Delegating simply means assigning responsibility to specific somebody else. For an example, a budget may need to be prepared for a specific department, such as production, and the responsibility for creating this budget may be delegated to the production manager. The production manager would then work with their team to develop the budget, taking into account their needs and goals for the upcoming period. Delegating responsibility for budget preparation can help to ensure that each department or individual is held accountable for their spending and has a vested interest in ensuring that the budget is accurate and reflects their needs. This term is really important. When some activity is delegated to specific somebody else, they will be held accountable because now they are responsible for that activity. Now let's discuss about what is a budget center. A budget center is a unit, department or section within an organization that is responsible for creating and managing its own budget. Each budget center typically has its own budgetary targets and performance measures, which are aligned with the overall financial goals of the organization. The budget center may be responsible for both revenue generation and cost management within its area of operation. Simply, when it comes to businesses, budget center will become the responsibility center. This is because a budget center is responsible for a specific activity or a specific area in an organization. For an example, a company may have separate budget centers for sales, marketing, production, and administration. All of these are budget centers. In other words, these are responsibility centers within an organization having their own budgets. Each budget center would be responsible for creating and managing its own budget and would report to senior management on its progress towards meeting its financial goals. So now the budget centers are responsible for their budgets in order to create the budgets and manage the budget so that the financial goals of the organization will be met. Now let's discuss about budget holder. Who is a budget holder? A budget holder is a person in an organization that is responsible for managing a specific budget. The budget holder is typically responsible for overseeing the spending within their allocated budget and ensuring that it is used in the most effective and efficient way possible. Budget holders may be given authority to make spending decisions within their budget limits, but they are also accountable for the results achieved within their area of responsibility. This means that they are responsible for managing their budget effectively and making sure that all spending align with the organization's overall financial goals. For an example, production manager in the production department is the budget holder of production budget. These individuals may be required to report regularly to senior management or other stakeholders on their budget performance and the results achieved with the resources allocated to them. So essentially, the individual who is responsible for the budget will become the budget holder. Now let's discuss about what are the controllable costs. Controllable costs are those expenses that can be directly influenced or controlled by the budget holder. Budget holder can be held accountable for controllable costs. This is really important. Always remember that budget holders can only be held accountable for controllable costs in an organization. Controllable costs can be managed through effective cost control measures and budgeting. These costs are typically associated with the day to day operations of the business. Here are few examples for controllable costs. Variable costs such as material usage and labor usage. This is because the material usage and the labor usage can be controlled by the budget holder. Depending on the material usage and the labor usage, the variable costs will be changed. So if the budget holder can control the material usage and the labor usage, this means material costs and the labor costs are controllable. Discretionary fixed costs such as advertising and marketing. These are the costs at the discretion of the budget holder. Discretionary fixed costs can be controlled by the budget holder. Directly attributable fixed costs which are relevant to the budget center, such as wages and salaries, supervisor's salary, cost of specialized equipment or software used exclusively by the department. Now that we know about the controllable costs, let's discuss about the uncontrollable costs. Uncontrollable costs are expenses that cannot be directly influenced or controlled by the budget holder. Budget holder cannot be held accountable for uncontrollable costs. This is really important. As now you know, budget holders can only be held accountable for the controllable costs. They cannot be held accountable for uncontrollable costs. These costs are typically associated with external factors such as market conditions, government regulations, and economic trends. Here are a few examples for uncontrollable costs. Tax and tariffs. These are imposed by the governments. Because of that, budget holder cannot influence or control these costs. These are out of their control. In other words, these are uncontrollable costs. Raw material prices can be changed due to various reasons, such as economic factors, inflation, deflation, and supply chain disruptions, weather conditions. Likewise, all of these factors are out of the control of budget holder. So the budget holder cannot be held accountable for the raw material price changes due to external conditions. Committed fixed costs. These are costs the business has to pay, such as loan payments, rent or lease payments, insurance premiums. These will be incurred no matter what. So these costs are out of the control of budget holder because budget holder cannot control these costs. They have to pay these costs. Now let's discuss about the main topic of this video, which is responsibility accounting. Responsibility accounting is a management accounting approach that the budget holder, which can be a manager, is accountable or responsible for controllable costs within the budget. Now you know every term we used here, such as budget holder, being accountable, being responsible, and controllable costs. In simpler terms, this means that the budget holder will be held accountable for the controllable costs within the budget because these costs can be influenced or controlled by the budget holder. And also important thing to notice that the budget holder will not be held accountable for the uncontrollable costs within the budget. This approach involves assigning responsibility for specific areas of the organization's operations to individuals or departments and then evaluating their performance based on their ability to achieve established goals and objectives. Here are the pros of responsibility accounting. Clear accountability. Responsibility accounting allows for clear lines of accountability within an organization, as each manager or department is responsible for a specific set of tasks and goals. Motivation. By measuring and rewarding individual performance, responsibility accounting can provide a motivation for managers and employees to improve their performance and achieve their goals. Effective resource allocation. Responsibility accounting can help organizations allocate resources more effectively as it allows for the identification of areas where additional resources may be needed as well as areas where resources may be overallocated. Improved decision making. Responsibility accounting can help managers to make better decisions by providing them with the information they need to assess the impact of their decisions on their department's performance. Limited perspective. Responsibility accounting may lead to a narrow focus on individual departmental goals, which may not align with the overall goals of the organization. Risk of conflict. Responsibility accounting can create competition among departments for resources and recognition. which may lead to conflict and hinder collaboration. Overemphasis on short term results. Responsibility accounting can lead to an overemphasis on short term results, as managers may prioritize meeting their immediate goals over long term strategic objectives. Difficulty in measuring performance. Measuring the performance of individual departments or managers can be complex and may not always accurately reflect their contribution to the overall success of the organization. Thank you for watching. See you in the next video.